Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh and welcome to another edition of our weekly podcast, The Week That Was. Indian assets concluded another volatile week amid a global sell-off. Global markets remain under pressure from the start of the week on rising inflation and growth worries and a series of global central bank policy actions. The US Fed raised its benchmark policy rates by 75 basis points, the largest rate move at a single meeting since 1994, and indicated similar hikes in coming meeting should inflation refuse to flatten. Bank of England raised the bank rate by 25 basis points for the fifth time in a row, despite the economy contracting in March and April this year. The Swiss National Bank raised its policy rates by 50 basis points for the first time in 15 years and indicated preparedness to hike further to fight rising inflation. Indian equities ended lower for 6 consecutive trading sessions, posting one of their worst weekly losses in 2 years. The Nifty index fell to its lowest level in a year, down 5.6% over the week, and underperformed most regional peers. Broader markets underperformed Nifty, with the Nifty Midcap Index falling 6.2% and the Small Cap Index falling 7.9% over the week. Among sectors, all sectors ended the week in red, with metals, IT, and energy among the worst performers, with losses of over 6.4% over the week. The Indian fixed income market too had a volatile week, with bond yields rising across the curve as US Treasury yields continued to edge higher amid inflation worries. Corporate bond yields rose higher than sovereign bond yields. However, bond yields cooled off later in the week as RBI announced a switch operation where it would convert shorter maturity securities to longer maturity. At a conference meeting, the RBI governor assured the central bank's commitment to a soft landing and reiterated that its transition to tighter monetary policy will be smooth and without disruptions. For the week, the 10-year Indian government bond yield closed at 7.54%, up 3 basis points, while the 3-year and 5-year Indian government bond yields rose by 11 basis points and 5 basis points, respectively. Yields for the 3-year maturity AAA, AA, and single A rated bonds rose by 19, 17, and 5 basis points, respectively. The INR remained under pressure throughout the week, hitting a new all-time low amid rising US Treasury yields, accentuating foreign portfolio outflows and a stronger USD. The INR closed the week at 78.8 per dollar, down 0.3% over the week. Over the coming week, all eyes will be on movements in domestic and global equity markets as they trade in oversold conditions. With this week's fall, Nifty index is now trading at 16.8 times 12-month forward price to earnings, marginally lower than the 10-year average of 16.9 times, indicating that a short-term rebound could be in the offing. However, a protracted rout in major global benchmarks, which have slipped in technical bear market territory, could dampen sentiments further. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.